All right, welcome everyone. Welcome to the Hurley Investments Trade Finding and Adjustments for the Thursday, the 12th of October. Glad to be here with you guys. Took a little bit of time off there. Had a family emergency, but I am glad to be back. Over the last week and a half, our market has turned bullish. And it's not that it's technically bullish. All we've done is we've bounced off of the 200-day because indexes rarely, if ever, are oversold. So all that's happened is we got an almost oversold bounce or bounce off of the 200-day on the S&P 500. Now, if you are following along with our trades, we were mostly trading the S&P 500. So we had a couple in here. We had an October 20, 2023 444 that we closed for, it was like $54 or 12.5% return on investment. We had another one that we let run for 102% return on investment, which turned out to be something along the ranges of I think it was 1,025. And then most recently, we had a November 2nd, 2023, 438 or 439. I can't remember which one. Long put. That we closed for a 45% ROI, and this one was more expensive. We had about $505. Nope, we had $468 for cash. And so the question that kept coming up, or the question that people asked me, what do we do now? Which I must say I thought was a little funny because we've been making money on the way down on the puts, right? Made money on the way down, and now it's like, well, Kevin, how do we make money on the way up? And this is primarily with the options, and I know not everyone uses options, so I understand it. But I just kind of sat here and I was like, well, let's do it the same way we made it going down, but let's use it with the other option, the long call option. And the long call option gives the buyer the right to buy the stock at a certain price for a certain period of time. It makes money as the stock goes up. It is going the opposite direction as that long put. And this is where you make money going up using an option for cheap, for something in that $500, $600, $700, $800 range, $900 range, instead of having to buy the stock. It is a stock replacement strategy. Now, I kind of giggled because the person I spoke to this morning was like, well, let's put it on right now. So if we were to go to our chart here, is right now on the S&P 500, is this the optimal time to be placing a long call, a position that makes money as the stock is going up? What do you guys think? Is this the optimal? Okay, so Mary, of course it's not, but why? Why is this not the optimal time to place a long call playing the stock market up? So Jeff made the comments below the moving average. It's below the 50-day, which is a moving average that you'll see institutional traders use. I don't know if it's in a downtrend because one day a trend does not make, but we do have a down day today. Jeff, go a little bit more on that thought process, though. What else about that thought process can you talk to us about? And Mary, I agree. Yes, the world seems volatile. We have a war in Israel right now. Inflation ticked up again this month. So watch the inflation fears come back. Yes, macro events or news events are not in our favor, right? Those news events are definitely not in our favor right now, helping us make a decision on if we are in some kind of bullish trend. I didn't see Jeff type anything in, but if you were to ask me, this 50-day moving average right now is a resistance level. And it looks like, at least today, it's not in any way looking to get up and break it. 2 days ago on Tuesday, it was closer to it and it hit and bounced down. So technically speaking, yes, we are technically bullish if we were using our standard indicators of an RSI, a MACD, a 5 and a 20, a 9 and a 20, a 15 and a 30, whatever simple or exponential moving averages you use. But it looks like we've hit the 50-day simple moving average resistance level, which makes sense because there are a lot of institutional big money traders that would be selling at this point, and they buy down here on the 200. So we'd be looking for a trend confirmation to see if our positions can trend higher, right? If it will go higher than where it is right now. So that'll be our indicator. We might also look like, and we're trading the SPYs because they're cheaper, we might be looking at a little different. I'll try to do the SPY here. See if this comes up. Nope. SPY. We might pay a little bit more attention to what we're actually trading. Again, the Spider ETF. It'll look much like the SPX, which is more the broader index. This is 1/10 of it. But the trade setup does not look profitable right now. And Jeff also mentioned slowing momentum. We are becoming overbought, where institutional money on the wounds percent R is overbought. So this is where I'm going to make a simple point to you guys, and I'm going to say this as nicely as possible. Education is for you to learn how, I'm going to say, to invest in today's market, not to copy what someone else does. That's why I've enjoyed the spread trade systems and the safe option strategies. Those are my two main ones. Obviously, Jeffrey Dunyan is trying to let you guys learn how to do it yourself. It is foolish to blindly follow a newsletter, someone else's trades. You need to be able to dissect if you think it's a good trade for yourself or not. I would definitely be using the long calls in the near future. And yes, yes, our November monthly, and I think those were what, 334 long puts lost $165. So yes, the short answer is if you looked at my trading in the last 5, I'm an 80% track record, but we're up $900 on our meta bull call. No, we're not. We're up. I'll have to check that. It wasn't 900. It was 7. I think we're only up 400. We're up like 12.5% on the bull call. But we made 54, 125, 468. So we basically made what? 1540, and we lost 160. So we're up 1,400 and roughly $1,400. Other than that, 1,370, 1,370. We did make over 100% return on investment, though, right? Kind of nice, but yes, money-wise, our last set of long puts lost money because it bounced. Now, I am a fan. I am a fan of long calls. The but side is, though, right now our market is very, very volatile. So I would not be doing the long calls by themselves. I would be creating some type of bull call. I would have a long call and a short call so that as we run into the end of this year, the long call is your profit-making position. If we're to look at this meta, now there are 500 shares involved with this, but if we were to look at our position here, we spent 11,000 on the leap long calls. We got a credit of 75.56. Basically, we're into this position, what, 3,500 bucks, right? Our profit right now, 977 that we're up, 631 that we're down. Wow, we're up basically 10%, 346 bucks. But we're in a position that's in the money where we're just waiting for time to bleed off, because for this one, we have $60 to the upside. And if you take $60, right, multiply that by 100 shares, there's a pretty big chunk of change here sitting in these meta calls. Remember, one contract is times 100. So if you have $60 times 100, that's $6,000 of profit in the position. That right now we only have 345 of it, whatever I said before, 346. It's going to pay to sit around to let our short calls decrease in value. And yes, if we paid 3,400, I mean the real profit's only what? They're 2,500. $2,500 is your potential maximum reward on the meta position. But we're going to get paid to sit for a while. I do like the leap long calls, but again, I would be adding a short call to everything. I would be doing a bull call strategy right now, just for a little protection because of the uncertainty moving into the end of this year. So, prepping to see if we're going to get a movement above that 438, and it looks like 445, right? If I was going to prep a position to be at, I hate it when that does that. All right, looking at these charts, if I was going to prep a position to be at, if I was going to try to be ready for some type of bounce above the 238s, if I was going to be paying attention to, hey, what am I going to do? Where am I going to be trying to do something? I would definitely, I'd be looking for a SPY call. If I was looking for an expiration, boy, I'm probably looking for the middle of December right now. It might take a while to load for whatever reason. Money Block is not one of the faster ones that are out there, but it's probably in that $7 to $8 range right now. I know it's going to be that 38. Come on, come on, come on, come on, come on, come on. Boy, this does me no good. There we go. Wow, it's expensive. So I would definitely, I mean, I'd be looking for a 438. It'll probably go down in price $1 as the market breaks the 50-day simple moving average. But your first stop is that 445 range, right? Your first stop that you're looking at is where your R1 resistance 445. So you're looking for about an $8 movement higher. That's what you're looking for, and that's where you're going to look to take your profit around 445. The good news is it's trading at 436 right now. That 438.91 is actually, boy, you might do 439, and that's going to be almost $3 higher, which would make your position here $3 cheaper. So you're probably paying $8.75, and you're probably going to do a 439 position. And really what you're looking for is if the S&P breaks that 50-day, you can put a SPY long call on, and you'll run it for the $6 up to that 445, and that's when you're going to take your profit, roughly $6 higher than your strike price. And that's, again, that's how you make money to the upside after you've made money to the downside for a while. But right now is not the time to be in this trade. You are prepping it. You're looking at this trade, you're setting it up, and you're waiting for that 50-day bounce higher. And again, you just have a little bit of space here. Realistically, you're not looking to see this come back up to these highs at the 44.50 or the 457. All you're trying to do is make this difference here, right there, right above it to your first resistance level. Again, this is not a time that you're trying to knock it out of the park. This is not a time that you're going long. This is just a time to pay attention on where it's going. And yes, to look at Meta for you guys one more time, could you get into some kind of 350, 300 bull? You could. But again, now is not time to be entering a trade, especially on Meta. Overbought. When you take a look at 302 up to 328, that's a significant run. We will see another run higher based on earnings coming up in Meta, but today is not a trade you put a bullish. Today is not the day you put a bullish trade on Meta. It's up there bouncing against the overbought RSI. There's no news that brings Meta higher. There's nothing that you're saying, hey, today's a good day to place a trade. In fact, if anything, it's somewhat exactly the opposite. So that's just something to keep in mind. So trade for the future is going to be a bull call. Excuse me, is going to be a long call on the SPY, or we're going to go back down to our puts. In fact, if I'm looking at things, yes, we do have a long position coming up here, but if we're looking at a chart, there's probably a better chance that the SPY is going to bounce lower and come back down and test the 200, which means we might be changing this to a put to play it to the downside. Just something to keep in mind. Any questions for me today? I'm trying to keep it simple. So yes, David, right now I would not be putting on a trade. In fact, if I was looking at something, it's probably a SPY to the downside using a put. But I was showing it today. People asked me today for how do you make it, money going higher? They made some comments to me over the last week and a half as the SPY was going higher. So I was just trying to help those that don't understand options, what position you could use to the upside. But no, today's not a day you put on a long call to the upside. The chart that I just showed you, if anything, we might be heading back down off of the 50-day to go test the 200 again. In which case, you're back to using puts that make money to the downside, calls making money to the upside. And this would be a great example to say, we missed the trade to the upside. Plain and simple. And I shouldn't have shut down stock charts, but we missed the trade to the upside on the SPY. And the reason why we missed it the upside is that one big up day. There was no reason on any of these 3 days you're like, oh yeah, let's go bullish, let's go bullish. But this candle right here, when it ran higher, that was where you got a confirmation to the upside. And it's only 7 basis points, 7 points to the high side. So plain and simple, this is one you could just, I mean, it'd be smart to say, hey, you missed it, right? You missed it. It moved too quickly, too fast. You're not going to catch them all. Don't beat yourself up for it, but you missed it. And again, the goal is not, hey, I made money on every movement on the stock. It's just capture a portion of the wave and make money as you can. I am not the best options trader. Jeffrey Dunyan with Safe Option Strategies, significantly better than I am. I get pissed off. I hate short-term trades. I hate losing. And so I get pissed off every time I lose, and then my wife doesn't like to talk to me because I lost $165 on a long put, and I forget the $1,540 I made before that. So hopefully that answers your question. Any other questions you guys have? Just trying to wait here a second. Okay. With that said, I will most likely be back for you guys next Monday. And that's me. Tell me if I probably sound a little digitized. Plan is to most likely be back next Monday for the commentary. Appreciate you guys being here. Hopefully I'm not out of anything. All right, guys. You guys have a great day. See you on Monday. Talk to you then. Bye-bye, everyone.